Welcome to all of you to this inaugural Trade Finance Distribution Initiative user meeting. My name is André Casterman. I've been involved in the TFD initiative since the very early days and delighted to welcome you today to this new form of engaging with our members. I'm delighted to be here on the virtual stage again, but soon we'll be on a real stage, at least in a few days in Bristol. I'm here today with Christoph Gugelman, Niels Belling, and Billy Sebel, and you will understand why we have invited those people to talk to you today. The goal of this user meeting is to engage with the members of the TFD initiative in a different way and in a much more detailed way, as you will understand. We want to make sure that we take into account your feedback on the recent progress achieved by various members of the TFD initiatives and making sure you can benefit as well. A lot of things have happened since you heard the phrase TFD initiative, since we launched the initial press announcements and about the members, the initial members and the recent members. We had a few of those. A lot of things have happened because we have worked on a bilateral basis with specific members or with pairs of members. But as you would know by now, any technology development taking advantage of cloud technologies, of software as a service, ensures that clients embarking on those software as a service capabilities at a later stage benefit from all the work that has been done by the early adopters. And this is definitely the goal here, to make sure that additional financial institutions having joined the TFD initiative can take advantage of the work that has been achieved at industry level by some of your peers, correspondent banks, clients, providers in the industry. So very delighted to welcome you. This session is recorded and you will be able to access it through the TFD initiative website at a later stage. We definitely are going to provide you insights on the recent progress achieved by various institutions you will recognize the names of, or sometimes you will discover as new entrants in trade finance and acting in specific segments that require new entrants to serve SMEs and corporates. We definitely are aiming to perform a short presentation here, like 25 minutes, and then getting your feedback questions on what we will be sharing. So definitely we want to offer you here opportunities to identify ways to engage with us. And hopefully in the short-term future, in 2 or 3 months, we will be able to meet in person at one of the next TFD initiative meetings that we aim to organize on site in London, as we used to do in 2018 and 19. The membership has increased, and we haven't announced yet all the new members. Some of them have been announced early this year in February 2021, but more recently additional members joined, like the ones you see on the right-hand side. And we know some of those members are joining us today. So we're getting now to a community of 50 members that we are happy to indeed categorize as asset sellers, mainly originators, as you would expect. Asset buyers could be originators or credit insurers, asset managers, institutional investors. And as you see at the bottom of the slide, we also have members that are dedicated to providing technologies, and more we see cooperation. We're going to talk about this between those technology players. We also see service providers on the legal side, on the implementation side, as you would recognize some of the major brands here, and sponsors, associations we're working with, such as the ones you see the logos of on the right-hand side. So we're getting to 50 members now, which are also listed on the Trade Finance Distribution website. We shared our vision back in the early days in March 2019 regarding the importance of the originate and distribute model. And that was released through a cooperation with the following players: ICC UK, ITFA, Standard Chartered, HSBC, ANZ, and of course TradeTech, through the white paper you see on the right-hand side. We are going to continue doing this. It's very important to position this initiative as complementary to and different to many initiatives happening in the market on the origination side. You know, the consortia the banks are launching to digitize origination. Here we're really focusing with TFD initiative, we're really focusing on distribution, the automation of distribution, the transparency of trade assets, the accessibility to those assets for existing and new funders or risk takers. So those papers are very important. We recognize that it is time now to indeed release a new paper. We're starting to work on a new paper where additional institutions, mainly early adopters, will feature and share their own findings, some of which we will share today for you. Another way to share market feedback are the podcasts we started to release at the beginning of this year. We have produced 9 so far, 8 you see on screen here, and the 9th one being released next week with one of the early adopters we're going to talk about in a few minutes. So those podcasts are available through most of the podcast channels, but also accessible on the TFD website, Trade Finance Distribution website. And of course, we welcome you also to contribute to those podcasts. Would you want to do so and share your expertise and leadership in that space through such channel? Just talk to us, any of us, and we will make sure we can get you on the podcast stage. With this, I'd like to hand over now to Christophe, who is going to talk about the bridge we are building between trade finance and capital markets. Christophe, over to you.
Thank you so much, Andre. Yeah, so we really want to build a one-stop shop for banks and asset sellers to be able to distribute, and not just to more efficiently distribute to other banks and credit insurance companies, a channel which obviously is very well established and has been in use for decades. But what has really not happened is the distribution from banks to capital markets in an efficient way. And the reason for that lies obviously in the operational complexity of the instruments, but also the low riskiness of the instruments. That means there is obviously also an associated low yield. And if you pair high costs for operations with low yield and low risk, then that makes it very difficult to distribute. I just want to give you one number. If you look at other asset classes, for example, the US mortgage market, it's a 16.6 trillion primary origination market. Of that, 65% gets distributed from banks to the capital market. And there is no reason why the 7 trillion, now here we talk about pass-through volume, the 7 trillion net of any credit insurance, which bank plus minus retain on an annual basis, why not some portion should be distributed to capital markets. And what we are jointly trying to do is now to reduce these friction costs to a level where also very low yielding assets can get distributed very efficiently. On the left-hand side, if you get it right, what is going to happen? Of course, we are going to process more. That means the bank will have more velocity on their kind of capital at use. And that will mean that the net interest income will rise, more profitability for the banks, but at the same time also corporates will get serviced better. And that ultimately will lead to the closing of the funding gap. So on the next slide, the pain points. The pain points, I think I mentioned largely already. It's the lack of capital market access, also now from a funder perspective. There is tremendous interest from large asset managers to access trade finance, but it's very hard for them to make it work efficiently. And the solution here again is the automation which we can provide. With that, I hand back to Andre.
Yeah, thank you, Christoph. Sorry, I had a hard time to find my unmute button. With this, I'd like to now ask Niels to introduce us part of the technology stack and share the recent client testimonials we have been working on.
Yeah, thank you, Andre and Christoph, and delighted to be here and talk about this today. So of course, as we've seen, the distribution of trade assets by banks, non-bank originators is something that is really just starting, and at the heart of doing this efficiently is technology. And what is laid out in this slide is essentially the message that in order to connect the asset sellers, the originators of the assets, with the investors or the participants, in case of direct assignments, you need this technology in the middle, and this technology has to enable the interoperability. It has to be effectively provide a network as a service where you can interact with your chosen counterparties. It has to enable trading automation and really do the asset syndication from soup to nuts, end to end. And if we move on in the slides, there's already a few use cases of clients that have started implementing networks like this. If we start with the more traditional bank-led asset distribution that exists, of course, paper-based, Excel-based, email-based today, then we can observe in the market that Commerzbank has very successfully implemented, together with AKA Swiss Re and Texel, the ability to distribute risk via participations to participants, either other banks or credit insurers. And this all is, of course, driven by technology. It's driven by the standardization and the integration into systems that enable the trading automation. And then the next slide, please. Another use case that's quite interesting is really the engagement of non-traditional investors in this market, and the attraction that alternative investors see. And a recent example of that is Santander Asset Management, that through their alternative illiquid credit investment arm have started investing into trade finance. And again, this is a technology-driven offering. It's based on selection of assets that initially come from the Santander Bank asset balance sheet, but will be expanded. And in order to do this efficiently, you need the technology that monitors, that tracks, that reports, and selects. And then we can move to the next one. And then lastly, but not leastly, there are two other use cases. The ING Federated Hermes is the use case that also plays into the non-traditional investor space. Federated Hermes, of course, very large US asset manager that has a long track record in investing in trade finance. They have expanded this, and if you have followed the press announcements around this use case, then ING has very publicly stated that they couldn't do this kind of trade with Federated Hermes without underlying technology enabling this trade. And then, of course, very recently, and Billy is going to talk to this in a moment in a bit more detail, is the world of tokens, NFTs, crypto, and DeFi. And there has been a very recent transaction where trade finance assets in a pooled form for the first time ever have been tokenized and placed with investors through an enterprise-grade blockchain solution, and we'll be hearing about this in a moment in a bit more detail.
Thank you, Niels. Indeed, we have been working very closely, as you can imagine, with those institutions since early 2019, with some of them actually since mid 2018. And the goal for them is definitely to expand their distribution capabilities by attracting additional financial institutions to work with, whether they represent banks, credit insurers, or institutional investors and asset managers. So the network effect here is important. Some of them indeed are looking for additional players to connect with them and to transact over the TFD initiative technology. And this is where the community effect is important, and whereby we want to make sure that the request from those institutions can be spread in the market and reach yourself, so that as many transactions can be digitized and automated as possible in the distribution space. With this, indeed, we want to focus now on the tokenization option that we have released very recently. This is a 2021 development jointly performed by two of the TFD initiative technology stack members, TradeTech and Xinfin TradeFinX. And I will ask now, it has been announced yesterday on the back of the initial transactions with accelerated payment acting as an originator, was covered by the press, as you see here, with the TMI logo, with the Treasury magazine. And I'd like now to invite Billy to tell us more about the tokenization technology offered by XDC Network and Xinfin.
Great. Thanks, Andre, Nils, and Christoph. It's a pleasure to be here. So I want to talk a little bit about the Xinfin or XDC network and our role in this. And so the XDC network, which was developed by Xinfin FinTech, is a blockchain technology solution optimized for enterprise use. And today, the XDC network's growth and development is supported by the XDC Foundation, as Xinfin FinTech has worked to develop our enterprise solutions. Now, part of our suite of technology offerings is our native asset XDC, which recently has garnered a lot of attention as a result of a number of use cases being built on top of our network. And as a result of that, we've seen our market cap grow to around $1.7 billion, which currently places us around the top 60 projects of the roughly 12,000 projects in the blockchain space. So XDC was designed to be used to settle transactions on chain. It can also be used as collateral or in a variety of other ways, such as fuel for powering smart contracts and transactions on the network. And at the heart of the XDC network is a delegated proof of stake consensus mechanism, which it's used to validate transactions on the network. And not only is our consensus model fast and cost effective, but it's also one of the greenest blockchain networks in the blockchain space. And as an example, the XDC network is 4 to 6 orders of magnitude more energy efficient than Bitcoin and Ethereum. And beyond just the focus on efficiency, the XDC Foundation has recently hired a head of sustainability with the focus on using the network to help mitigate the impact of climate change and fund green initiatives. The XDC network is a decentralized network with private businesses and independent community contributors using the XDC network for a number of use cases, from encrypted, decentralized email and storage to trade finance tokenization, which is why we're here today. And with trade finance being our main focus, we've worked with TradeTech and our development partners to create a smart contract tokenization platform, which was used for this particular tokenization. So we can move to the next slide. Now, our smart contracts tokenization platform creates a framework that enables these processes to be standardized as a white label solution with an easy to use interface, which is connected to the XDC network. creating a seamless transition for our enterprise partners to get the full benefits of blockchain without the need to go through the learning curve of blockchain development. And the real benefits of smart contracts is that they enforce the parameters you set and are created and enforced through code without the reliance on centralized parties to fulfill these obligations. And so this means that it's highly reliable, visible, trackable, and immutable. But what we're doing here and is not just about smart contracts, but really about creating an ecosystem. Our smart contracts platform serves just as part of the technology stack, or not just part of the technology stack, but as an essential part of an ecosystem being built for trade finance with the TFD and trade tech. In this ecosystem, we're bringing together SMEs, originators, investors, custodians, and other market participants with KYC enforced transactions in regulated markets with standards. And we can go to the next slide. So what's the importance of our role with TFD? Well, we've partnered with Trade Tech to facilitate their use of the XDC network, which serves as the foundation of the technology for the blockchain to help reduce friction and costs in trade finance space and fill the multi-trillion-dollar gap in financing to SMEs across the globe, which is the real opportunity in front of us today. Along the way, we're able to offer more secure, frictionless, low-cost options for banks and originators, creating a massive competitive advantage by eliminating manual processes and paper trails. So it's important to understand that this technology is actually available to everyone to use, but our main objective is to work with Trade Tech to make it easy for this technology to be used by the members of the TFD. This in turn will allow us to easily scale up the use of the technology from the transaction we just completed on September 20th, with an increasing number of transactions and growing transaction sizes, enabling us to scale up quickly to much larger transaction volumes. So simply put, our goal is really here to help facilitate the seamless delivery of this technology for those that want to participate in these markets. And that's really what we're here for. So that's it. Thanks, Andre.
Thank you, Billy. Yes, I'm particularly excited by this cooperation because it really illustrates the reason for TFD initiative. There is no single platform that can do it all. There is no single vendor that can do it all. By combining the best of already highly specialized players, and in this case, within TFD, we have Trade Tech and XinFin XDC network. By combining the specialization of each player, we get to a superior distribution solution, meaning all the distribution mechanisms are brought to life thanks to this combination. And at the business level, we can bring additional investors, such as retail, into the market, the distribution market as well. It's fascinating to see that often trade finances are considered as very old-fashioned and behind, and it is true. Having worked in payments, in cash management, many processes are still, we know, paper-based, very much covered in the press. Everyone knows that by now. However, now with TFD initiative and Trade Tech and XinFin XDC network, bringing the most advanced technologies to this market. So in terms of leapfrogging, another buzzword that was used in some markets, in payments in Africa, for instance, but here in terms of leapfrogging, the trade finance market can definitely take advantage of this additional bridge or extended bridge that Trade Tech and XinFin are building as part of TFD initiative. And that's really the goal of such initiative, is to make sure pieces or different technologies can be assembled to bring the appropriate value propositions to the market. And we won't end there. First of all, we talked about one first originator with accelerated payments, having done already live transaction on this new offering, and there will be additional originators doing the same. But secondly, there are additional technology members as well as players as part of TFD initiative that will continue to enrich the whole end-to-end ecosystem. So you can expect more in the same mindset of technology cooperation, but also business cooperation to be brought to you as part of this initiative. With this, I'd like now to ask Christoph to tell us more about the offering.
Yeah, thank you. So obviously it's tremendously exciting now to be able to offer trade lifecycle management across not just different channels, so channels as illustrated earlier on, from the bank, the asset seller, to kind of different other participants like banks, credit insurance companies, and also capital market participants, but also now also across different delivery mechanisms such as outright assignment transactions or the tokenization or the notes creation. And the underlying piece of all of that, and that can be done now, and it's not just in a proof of concept, it's now actually applied and in production, is across both single names, but as well as portfolios. We can now offer pre-trade, trade execution, and a post-trade solution. And it's getting kind of like used on a daily basis. And as we kind of progress and collect the feedback from the TFDI members, also the overall tech provider, tech stack can be improved on an ongoing basis. So pre-trade, what it means is it's really that a seller can define its own network. There is no kind of such thing here as an eBay where kind of like someone puts up its instruments and then it's made visible to everyone, and all kind of the counterparties of one bank would be disclosed to its competitors. This is really a private network which runs on the infrastructure and where data can be hosted wherever data needs to be hosted, and can be configured very specifically to the needs of the seller. It also involves the negotiation of facilities or the negotiation of single transactions, which can be done on the platform on a tracked basis with multiple parties. It involves as well then the trade execution part, which is really the core of the whole thing. And that means it's not just a token which can be created or a node which can be created with a static pool of assets. We now are able to do replenishable transactions. So the automation of having thousands, hundreds of thousands of instruments which can be processed and can then be securitized, tokenized, or just passed on an assignment basis. And then finally, the whole reporting can be done on a real-time basis. So rather than having to do this manually, all the NAV calculations, the kind of economic breakdown of the portfolio, but also regulatory reports can be triggered and called upon the need. The next slide, we will kind of look a little bit at the key priorities. So what we get from the ecosystem and from the community is that a number of aspects need to be fulfilled. And definitely there needs to be a bank-grade infrastructure. That means full certification of all the technology which is involved. We have these private permissioned networks, and data residency, I think, is very, very important, particularly for the large banks, which then drive also some of the smaller banks into this network. Interoperability is key. That means the upload of data can either be done on a file format, but ideally, where we all want to get to is obviously an API integration into the back office systems and into the limit systems of both the sellers as well as the investors or participants. And that has already been now demonstrated a number of times, and it flows very needlessly where it has been fully integrated. AI is obviously there to augment the user experience. There is a number of help which can be provided, but also where necessary, some form of credit risk analytics can be provided. And why is it so important? Well, trade finance is generally is not a rated asset class per se. It has risks which rating agencies don't like to deal with necessarily, like dilution risk, fraud risk, etc. And in order to get a sense and also transparency about the underlying risk, we do need AI and we do need credit risk analytics in order to also fulfill certain regulatory reporting requirements for pension funds, insurance companies, and the likes. And then finally, where we need to get to now is to scale. And that's something collectively, if we do that, and if we do scale, then it will lead to a better usage and even more kind of like benefits to individual earlier adopters, since the network will start to grow and efficiency will start to come into play. And all of that will lead to one single thing, and this is the cost savings, which now will make it possible to distribute also low risk operational intensive assets and therefore tap into new sources of liquidity. And with this, I hand over back to Andre.
Thank you, Christophe. We're coming to the end of the presentation and we wanted to keep it short, 30 minutes. So hope you appreciate that, because we definitely want to hear. And I know it's not easy because it's the first user meeting we organize, but if you have any questions, any comments, of course, you can get back to us at any point in time after this session, but feel free also to submit your questions, feedback, remarks now via the Q&A, or I can also unmute you and allow to talk if you prefer. I know some of you were present at the very initial kickoff meeting we held in London in December 2018. So I hope what we presented today matches the intentions and the vision we shared back in the days, almost 3 years ago, rather than only coming with a vision and intentions. We're now coming with real implementations and parties to work with. And that's where the opportunity lies for you to engage with those early adopters and discuss about their plans for digitizing and automating distribution, or to engage and contribute to TFD initiative by producing a podcast with us, or by discussing additional requirements, market needs that you spotted, and that will help us increase the value proposition. So I already see a first question. Thank you. Question is, what is the benefit of tokenization compared to other forms of distribution? Christophe, Niels, you want to take that?
Yeah, maybe I can do a start. So obviously the traditional form with notes is that notes will generally go through a central security depository, such as Euroclear. Now, if I want to buy a note as an investor, then I will need to get access, and I need to be big enough to actually get access to a central security depository. If I don't have access, then I cannot get a delivery versus payment, or so-called DVP settlement. That means it's not as safe. I kind of like need to pay money and then hope I'm going to get the investment certification. What we can achieve with tokens is an atomic DVP. That means we can now go into the retail space as well, and we can make it very broadly accessible, and we can offer every single one of these investors access to even small incremental amounts, you know, of a trade finance asset. So this is, it's kind of a game changer for the asset class per se. Maybe someone else wants to add, I don't know, Billy or Niels.
Well, I think I'll just add from the technical side of it, you know, tokenization shows clear ownership on chain. It allows you to have it be tradable on chain. And I think from the standpoint of obviously what Christophe had just described, it's a significantly easier process to do once it becomes, you know, as automation becomes online or more and more online with the development of the technology, behind what we're doing.
Thank you. That's very good to have a first question. It helps me a lot. Anyone with a second question or remark? Welcome, Angelia. So of course the goal is in the future, and again we're trying to do that in December in London already, to run a user meeting with early adopters on stage, sharing their experience and explaining it in their own words. We thought, as this is virtual, we could cover those testimonials ourselves, and but the goal is definitely to bring to you those early adopters so that you see the kind of innovations they are bringing to their clients on the back of an automated distribution, and of course on the back of increased liquidity coming to them as originators, because at the end of the day, this is where the criticality for originators, at least the ones we have worked with, is to get the enhanced liquidity when it's coming from asset managers or banks. But definitely the goal is to bring those to you in a second user meeting live, and having indeed more discussions about those innovations and seeing how you can benefit from those as well. Again, whether you're acting as a seller of assets, a buyer of assets, or as a service provider on the legal side, a law firm, or on the technology side as a service provider for IT implementations. Do we have any other question at this stage or remark from some of the early adopters that are connected to this session? No other question. I don't see one. Well, that's fine. Let's close it here then. Want to thank you all for joining us today. I hope that you found this newsworthy. Oh, we have one question. One question, can you please comment on the goal to enhance the upstream opportunities in trade finance by creating downstream paper which can enhance capital markets participation, particularly for the SME type markets? So can we comment on the goal to enhance the upstream opportunities in trade finance by creating downstream paper? So Christoph, you want to take this? Is it originate and distribute model?
Is this meant kind of like upstream to downstream? Is it? I hope it's not meant in a purely commodity sense, but it's really meant generally kind of like how you originate and integrate the whole process from the origination side all the way down to the distribution side. Okay, yeah, I think that's interesting as well, because there's obviously a lot of development and a lot of progress made on the origination side, where also DLT systems are in place and which are creating much better digital data in the kind of like in the origination process, for example, for a bank, and link up not just the buyer, the suppliers, but also KYC systems and all kind of other identifier systems and whatever is required. What always will have to happen is, because the bank is obviously the one providing balance sheet, and if you provide balance sheet and deploy risk, you need to book it somewhere. So it goes into your back office system, and those systems can be provided by a number of providers which are out there, or could be built itself. And then from there, the bank needs to distribute it. So I think the seamless process is really to get more digital data into these back office systems with more information, and then distribute it from there efficiently end to end through an infrastructure the way it kind of now is accessible across the different channels as described. I hope that answered the question. If not, please let me know.
Yeah, feedback from Shaheen is that right now many banks don't want to sell down because it means giving away revenue. So indeed, the strategic choice to implement the originate and distribute versus keeping an originate and hold model is up to each bank to, it's a decision for each bank to take. We also see new entrants in the SME space, such as the non-bank platforms. Accelerated payments was mentioned, but there are many more we are working with and hundreds in the market that have indeed a need for third-party funding, because as a technology platform, they definitely don't have the balance sheet to implement an originate and hold. And this is where the originate and distribute on the back of notes issuance or tokenization is not just attractive, is critical to them. And that's definitely a key market development we have spotted and taking into account. So thank you, Shaheen, for your question. I got another question via the chat. Is the technology behind those implementations you presented already available? Niels, can you take that, please?
Sure, and of course, as outlined, everything, the whole trade distribution enabling is built around the technology, and this, as we've seen the use cases, it is available. It is ready to be used. There are large parties in the market who use this on a daily basis. And speaking for Trade Tech, we're expanding our offering. We're extremely excited about this first transaction with Zinfin and the ability to move into the DeFi space and all the benefits in terms of transparency, access, liquidity that it brings to provide these to the market. So by all means, absolutely, the technology is ready. We as Trade Tech are ready, and we're excited to engage.
Thank you, Niels. Got another question in the meantime via the chat as well. There was a reference by Christoph in the press to stable coins. How do you see the link between the tokenization that has been delivered just now for on the back of XDC network and the stable coin developments?
Yeah, so stable coins, there is a number of stable coins out there. There are some which are US dollar backed, like USDC, USDT, the Tether coin, etc. But what really happens behind this is not that the providers essentially go to the bank and just hold kind of cash. What they will do is they will invest in CDs or ECPs or other short-term commercial paper. And by doing this, they guarantee that they have high quality assets, which are also in a short-term liquefiable and therefore can then lead to a liquid product which can redeem. What we feel is that trade finance could lend itself extremely well to this, because trade finance is very secure, particularly if it's bank originated from large corporates or large corporate networks, sometimes from non-bank originators, and where it can be fully insured. And make this collateral essentially accessible for a similar type of stablecoin offering. That does not exist today. What exists is, besides the USDC and USDTs, etc. offerings, there are commodity-backed offerings, particularly gold-backed offerings. So there is no reason why we couldn't create something in the trade finance space and really attract a lot of interest. There is probably, if you observe the press, there is a lot of talk about regulation, and that is something, I think we have to be completely aware of. This space will get regulated to some degree, but that shouldn't stop us really from doing it. It's the right thing, to get a robust infrastructure in place and a robust offering as well, and therefore also protect investors. accordingly.
Yeah. Thank you, Christophe. And I have a question for Billy as well. How do you think the market for trade finance will develop on the back of tokenization and decentralized finance?
Yeah, that's it's a really good question. I mean, one of the biggest challenges that we have in the development of the technology is, how service providers are coming online in order to fulfill the needs that we have within the technology. As custodians, on-chain custodians are a good example of that. Is that we want to be working with custodians in jurisdictions that are regulated and that can really fulfill the needs of our ability to do the trade. And so so we're really at the very beginning. I think what we've completed is actually really it's taken years to do, and it's incredibly exciting to get to where we are. I think that we're going to be scaling up relatively quickly, I think over the next year, to a point where we're seeing many more of these technologies widespread in jurisdictions where we're able to use them. And that's going to free up the opportunity for more and more people to come on board and start developing these types of instruments. And so I think as we talk about it, it actually scaling up from where we are now is is not that difficult to continue to move forward. It's just a matter of how we're able to continue to develop the technology to get it to a point where it's really removing all of those front end functions that are causing a lot of the challenges that you have, from paper trails to just processes that are manual right now. So I think it looks very positive, and the time frames are hard to tell as to how long it'll take. I think that's really the one thing I've learned from this whole process.
Okay, thank you, Billy.
Yeah.
And definitely it will be interesting to be able to announce the next originators that will take advantage of the new funding offered through tokenization, in the same way as accelerated payments did. And definitely coming back to the comment on the originate and distribute versus originate and hold, the logic for non-bank platforms serving SMEs, like approved payables finance or post-shipment finance before approval, all those kinds of funding requirements, the opportunity to get funding, whether it's through notes or tokenization, is huge. And this is where we see more rapid development. But of course, again, here we're talking about technologies available to any originator, whether they have a huge balance sheet that they also need to manage for different reasons and in different ways, or whether we're talking about those new entrants or even factoring companies in the future. So thank you for your answers to those questions. I don't see any other question at this stage. So I'd like to thank you all for joining us today. And thank you for also joining the TFD initiative and being part of this community of institutions that really want to digitize, automate, and make trade finance far more attractive to new funders, to existing funders, of course, but also to new funders. We want to continue this process, so we will come back to you with proposals for producing podcasts, for participating to the next thought leadership paper. We will target mainly the early adopters for that, for joining us on the next user meeting that is in planning stage at this point in time. And of course, at any point in time, don't wait for us to come back to you. We are working very closely with a number of institutions we shared today and additional ones, and we want to work with you in the same way in order to make sure we can address your particular needs, and that can only be done on a one-to-one, on a bilateral basis, I mean. So do not hesitate to come back to any of us for discussing your particular questions and needs in this area. Thank you very much, Niels, Christophe, and Billy, for acting on stage today, and looking forward to working together for the next phase of our developments. There will be more news before the end of the year. So watch this space, as we say. Any final words, Christoph, Niels, or Billy?
Nothing from my side. Thank you so much, Andre.
Thank you, Andre. Great to be here and great to see you all.
Yeah, thanks so much.
Bye-bye. Thank you.
Bye-bye.
Bye.